Sarthak, welcome. Welcome to the club.
Thank you.
The last time we did this, you were the one who was interviewing me, so I thought it was appropriate if I returned the favor. There are not a lot of people who don't know this gentleman, but for those who have been living under a rock, Sarthak wears many hats. He's an entrepreneur, he's an investor, he's an author, and if I may add, a little bit of a social media phenomena as well. His ability to simplify complex ideas around business and finance has made him one of the most followed voices in this space. And tonight we're here to talk about his new book, Moneyball, which is also about mindsets, missteps, and the meaning behind entrepreneurship. So before we dive into the book, Sarthak, tell us a little bit about your journey, what got you here, what inspired you to write the book here?
I think the entire idea about writing the book possibly comes much later. But my journey essentially started off as someone back in school being really afraid of mathematics, to the extent that when I had to pick a stream in the 11th grade, science, of course, wasn't an option because both my parents were CAs. So commerce was the natural choice that I had to make. But then you have commerce with math and without math. And of course, I was going to take without math because I just could not do any bit of math.
I took commerce with geography, so...
Yeah? So, wonderful. We've got a great panel discussing finance today. And it was so tough, but I went back home and the school required me to get my mom's signature to pick commerce without math. And when I took it to her, she's like, how can you not take math? And it's so important for life. And I said, I'm a big boy and I can take my decisions. And then she said, she was like, you're not going to listen to me. Let's ask Bhagwanji. And then we made chits, okay? So we made chits, 2 saying with math, 2 saying without math, and we put it in the temple at home. And then she said, of course, you need to ask God to genuinely give you an answer. For that, of course, we had to sit down and pray for 2 hours, and we did that. And then when I finally picked a chit, I opened it. It said without math, and came one slap on my face saying, you're taking math. And that's what I did. So I think with that, I was pretty much forced into math and finance, and I just absolutely hated it because I never understood it. Which is why when I actually went on to do my MBA at ISB, I thought this was my time to actually get away from finance and more into marketing and leadership, because I thought that was more touchy-feely, and you could get away with more of storytelling and narratives. But as luck would have it, when I started off my own consulting firm post my MBA, a bunch of alums from ISB started reaching out saying, we're looking to raise capital, can you help us? And I said, sure, I do this for a living. I mean, when you start a consulting practice, you can't say no to any work that comes your way. And I think when it really came down to making money, I figured helping startups raise capital was one thing where the success fee could really give you a massive upside. It could also give you an opportunity to actually invest in some of the startups that you could help raise. And it's just the monetary incentive that finally made me understand finance. Because when I started speaking with my friends who used to work at the Big Four and one of the, some of the big law firms, asking about why is this clause structured in this way, or why are we valuing this startup in this particular manner? I mean, the answer I would always get would be, great question. This is how it's always done in these deals, and maybe I'll check with the partner, or maybe I'll check with, the partner's boss, or maybe the managing partner and whatnot. And I never got like a clear answer. At which point I realized practically everyone in the world today is just winging it. And not because they don't know anything, it's because the world is changing so rapidly. And that gave me a lot of confidence to kind of look at finance from a common sense perspective. And when I started looking at it from a common sense perspective, I just felt I wish someone had kind of explained finance to me in the way that I am learning it now. So I think today our business is all about being the learning and development department of every small and medium business in India. We are their L&D department that they depend on every day for some insight. If they want deeper insights, they can go and consume longer media that we produce. They can join some of our one-to-many learning programs and engagements that we kind of conduct. And that's how we look at it, which is why, if you ask me, what am I? I'm not really a CA. I'm not someone who would like to identify as an MBA or someone who does a little bit of investment banking. I think I'm just someone who focuses on what is it which is changing today, what is it that is new in the world today that I can learn and just share with the world, and that's what I do.
So are you would you classify yourself as an advisory firm, a media firm? Where do you classify Sarthak today as a business? Before we we jump into the book, by the way.
No, so very tough to answer that because I wouldn't want to put myself in a box and confine myself to one identity and then not be malleable enough. But I would think as of today, our business has 3 verticals. There is business consulting, where we do investment banking from Series A to C for startups. And we help businesses set up newer verticals internationally. So if you want to enter a new market or if you want to launch a new product, launch a new vertical, that's what we do in business consulting. The second is business education, because we can't take more than 6 to 7 mandates in a year for consulting. So business education is where all our learnings through different projects we want to kind of pass on to multiple people in the form of one-to-many. And the last is business media, which is what I'm known by a lot of people by.
Listen, with 3 million followers, I think you can start any business and blow it up. But let's get into your book. I went through your book. I've gone through, and like a lot of folks here who I recognize as well, gone through their own entrepreneurial journey. I think the fundamental question is, for someone who's young or thinking about getting to entrepreneurship, are you ready for being an entrepreneur? And I'd love to get your thoughts. Obviously, it's glamorous, or seems glamorous. It's a fancy word. It's a French word. I sometimes spell it wrong even now. So it's not an easy word to write down sometimes. But it's not cut for everyone. So kind of how do you give advice, or how do you assess whether someone's ready to be an entrepreneur or not?
I think there have been a number of surveys which have been done all over the world, which ask people, why is it that you want to be an entrepreneur? And the most common answers include, I want to be my own boss, or I don't like the work that I do and I think I want to do something else. So you would essentially notice people pick up on entrepreneurship and wanting to be an entrepreneur because they're kind of thinking of it as an escape route from their existing boring life. And they think this is going to give them status and a lot more acknowledgement from people around them. And they're searching for a lost identity. But I think when you take that mindset and when you go out raising capital, an investor is essentially looking for returns. And I think that's where a big change comes in. But even going backwards and really asking yourself what it really takes to be an entrepreneur, I think there are a number of, among our clients, there are a number of listed entities, and we kind of advise their 2nd or 3rd generation because they're saying this business is running by itself, and what is my calling, what is my legacy, what is my identity. And the moment we kind of take on those kind of assignments and start working with those people, what we've realized is they want to be entrepreneurs, but they can't start anything that starts small. So if you think you're going to do 5-6 crores of revenue within the first year, suddenly that'll be so beneath their idea of what a business should be, because they'll say, my uncle will tell me why you're doing this, you might as well join your father and contribute there. And that stops so many people from starting because they're so concerned about what others would think of them and how others would judge them. But practically every business starts small. So you need to really have a thick skin to say, can I put in 2 to 3 years and not be bothered about what other people think about what am I really building, because you'll pivot. Every time you meet them in 3 to 4 months, you might have a different answer for what you're building based on some learning that you've had building it. And are you very self-assured? So I think that's a question you should really ask yourself. And
I was told, and I can understand this from my perspective. First of all, there've been times, it's a lonely journey, as you know.
Yes.
There've been times where I've kind of questioned what I've done, and I still sometimes I think, would I do this again? But when I speak to investors, and one's now met a lot of them are friends. I've dealt with some of them as well in a professional capacity. One of the things that I hear them say is that, hey, we're looking for someone who's got a little bit of a chip on his shoulder or her shoulder, or a kind of point to prove. Is this something you've noticed, is that there's something a little extra that you need that allows you to weather through this delayed gratification, gives you the resilience, gives you the madness to prove a point that not everyone will believe on day one till you can prove the point, so to speak?
100%, because I think you really need to be a certain kind of mad to not care about public approval and keep building and keep looking at a vision which may arrive maybe 2, 3, 4, 5, 10 years from now. And I feel practically anyone, and I'm not a psychologist, but I've been reading a fair bit, and it says that for anyone who takes on entrepreneurship, there is definitely some kind of trauma in their childhood that they're really trying to, heal in some way and some point to prove. And I think that's absolutely right, because if you look at, there's one question in the Stanford Graduate School of Business application that, and they didn't change that question for almost 8 years. If you had to apply to Stanford for their MBA program, every year, just one essay, no word limit, which was what motivates you and why. And I remember about 10 years ago, I just sat down with that essay to think, why have they not changed it? What kind of answer are they really looking at? But I think what answering that essay helps you do is look back at your life, make like a diagram of every point that you had a fork or a bunch of options to choose from, which one you picked at each point, and can you find a pattern as to what is leading you to pick those options every single time. For me, when I mapped out my life, I figured my biggest motivator was facing my fears. I'd grown up fearing a bunch of things at different stages in my life, and I think, which is also the reason why I did not sign up for placements at B school. And I thought I'm going to start my own consulting firm, do something of my own. And I think it's because I was like, am I afraid of getting a certain amount of pay package in a job, or, employers thinking I'm worthy enough to work with them?
So or almost like an insecurity that...
Absolutely. And I was like, I'm going to build something of my own and let's see where it goes. So you definitely need that to really build and to hustle.
We live in a world of Shark Tank, and or an era of Shark Tank, or a generation of young people who are growing up and getting into the working environment, seeing Shark Tank. So I think it's spawning a new generation of entrepreneurs and ideas, but I think it's not as glamorous as it seems, and there'll be a lot of blood or tears that will be shed during that time. Is there, just before I move on to the next sort of question about spotting the opportunity, is there something that you've come across in your years of your consulting world and helping entrepreneurs, certain characteristics that you think allow you to see who might be successful versus not, or do you think it's very sort of, it's not specific?
I think, the only thing I would care for is how much do you care for public approval. If you really care a lot for public approval and everyone thinking, oh, you're doing something great, I think it's going to be very, very tough for you. So you have to be crazy to not care about what people think and just have that
reverse. You're looking for what you don't have as opposed to...
Correct.
All right, so moving on, obviously spotting the opportunity is an important part of starting one's entrepreneurial journey. I know what kind of opportunity we thought we were spotting when we started. How would you recommend people look at finding the gap, the white space, so to speak? What are some of the anecdotes you want to share around that?
Yeah, the first thing, of course, that I constantly obsess over is I will always have, out of maybe 20 tabs that I have open on my browser, there's an Amazon.com, there's an Amazon.ae, there is an Amazon.in, there is an eBay.com, and I'm constantly looking at, is there an arbitrage in some product purely out of my curiosity? Yeah. So I think essentially what you're spotting is a product that you can sell for much higher in some other market. And I think I'm really curious to, I've been to the Canton Fair in China a couple of times, purely out of my curiosity to look at what's really happening. So I think as part of our business, because we do L&D, every year we try, can we do 4 trips which are purely educational. Take out a month, go to a country, just try and understand what kind of consumer behaviors are evolving and how are they different to what it is in India and where do we see India going. If I had to really bet on something today, I would think longevity and bioengineering is where so much is going to happen over the next 10 years. There is a possibility, we may cure cancer. And I think after AI, bioengineering should definitely be the next wave. So someone who's building there, I'm really curious to see what's going on.
We should talk about it after this. No, well, I fully agree with you. I think the longevity and the preventive healthcare with technology today, I think is going to be the future. Sarthak, obviously there's an arbitrage, there's gaps. What about like the appropriate fit of the founder to fill that gap? I mean, how important is that?
Yeah, I think that's kind of step one, because that's where your idea of why do you really want to be an entrepreneur comes up, which is why I would always say, whenever we sign up with people to say we want to build a new vertical, we're like, let's do the Ikigai framework. Let's do what is it that you have skills for, what motivates you, is there an opportunity, can you make money, and do we have a common section in this entire diagram where all these things meet? I think that's important, because you should not pick a business only because you think it's going to make you a lot of money. Because money as a motivator stops being a motivator very quickly in life. And I would hope it stops being a motivator very quickly for a lot of people for whom it continues to be despite them having billions. So I think for me, I've figured at this point, my motivator is learning and just figuring out what is it that I don't know and can I learn something. Where lies your obsession? And maybe in a few years, I think naturally I may progress towards, I want to know more beyond business and economics, and I may get on a spiritual journey, and you might just see me get like a hair transplant with long hair, long beard. I think that's a great business, to be honest. I think, being a spiritual teacher is a great business, and maybe I might find myself on that route.
Yeah, but, I mean, just stepping back for a bit, going back to the moat, so to speak, right? What is the moat? At the end of the day, you can find the arbitrage, but how do you build, if you want to build a long-term sustainable business, what is the moat that you create? And how much of the moat is the product? And I guess, I'm just, maybe there's no direct answer for this, but how much of the moat is the product versus how much of the moat is the founder for that product? I mean, is this something that you've thought about or think about? Or
yeah, I think whenever I think of moats, I feel in today's day and age, just one moat is never enough. And I feel one should always know exactly at least two moats that you can identify. And I would always say distribution is a bigger moat than product is. And the reason our media vertical is also scaled is because how we look at it is it's an opportunity for us to every day get consumer feedback on what is it that the market demands. And even if we look back at all the topics that we put out content on, it started off with personal finance, tax planning, and corporate finance and valuations. But sometime about 2 years ago, we could sense that the valuation content is not doing very well. And there was a correlation with respect to, how the markets were not funding a lot of startups back then. So, you start catching public sentiment a lot quickly based on when you put out data and you have like a feedback loop, so to say. And I think that today is
specific to what you were doing. So
it's very specific to what we are doing. So in our case, distribution is a moat. Iterating faster on consumer feedback. Once you have distribution, you can launch a lot more products. You can innovate better with consumer feedback. So I think among two moats, distribution should definitely be one, which has huge amplification potential for people to get sales. And the other could be technology. It could be some insight that you have. It could be some access that you have based on something that's been passed on to you in legacy. And I would say never be ashamed of what you've got, because the world is unfair. Everyone starts off different. They end up in a different way. And I feel a lot of times
embrace it and take advantage of it.
Embrace it and just take advantage of it.
So, I mean, that's a good segue into what I was going to ask you next, is about, obviously, how do you go to market? And obviously there's been this, do you think founders obsess too much on product and too little on go-to-market and distribution? So that's kind of the first question.
100%.
Is this an error that you see a lot of founders make?
100%. I think we obsess too much about the product and we end up falling in love with it. And then, by the time we go to the market, we realize either the market is too small or we are a little crazy to be entrepreneurs ourselves. So I think to get a grasp of the market and to give you some context on it, I was reading this today. I was just reading about how in October, the inflation numbers in India, okay, are at 0.25%, which is possibly the lowest India has had in decades. But over the past 6 months, I had friends who came down from San Francisco, from Hong Kong, from Dubai, from Switzerland, all 4 different conversations, different time. And so interesting, where all 4 of them happened to say that, now that we come back to India, we end up spending the same amount on eating out and on services as we do in Dubai, in San Francisco, in Singapore, in London, in Hong Kong. And they're like, India's become so expensive. So I think my question today was, why is it that India's become so expensive when, inflation figures are 0.25%? And when you look at the data, 55% of the population of India gets free education, because they go to government schools. 55% of the population actually gets subsidized food at 2 to 3 rupees per kg of food grains. 85% of the people in India don't live on rent. They have their own house and own family house. So when you remove all of this and you only look at an urban person living in a Gurgaon, Bombay, or a Hyderabad who's living on rent and their children are going to a private school, education inflation over the past 10 years has been 170%, and schools are increasing their fees every year by 10 to 20%. So essentially, all of us and a bunch of entrepreneurs, anyone who's in this room now belongs to this small segment where their worldview is so different from what the data shows. And if you're building something for Bharat on the back of technology, your worldview is so different from your end consumer. Which is why I think just looking at data and going to market much faster is better, because you get a lot more tangible feedback and you can just...
Any interesting go-to-market sort of examples you want to share with the group here that you think people have thought out of the box or done something interesting or unique? Consumer, perhaps, in the context of consumer products?
Yeah, I think two things I would really want to bet on today in terms of consumer behavior. I would say one is the experience economy, and the second is banking on building something for a community together. And to give you a very...
Talking about Quorum?
Yeah, I think it's in the right space. It's in the right space, which is why you're getting competitors like the Aditya Birla and Reliance, really building after you guys started. And to give you a very basic example, one of the fastest growing categories in jewelry in the US right now is permanent jewelry, where people get bracelets welded onto their wrists to say this is anti-consumerism. Because, slow consumerism in a way. I don't want to change my jewelry every day, so I will get a couple of bracelets welded onto it. Now to do that, what people are doing is to get higher average order values, they're saying maybe get 5-7 friends together who do this together as a sense of community. And then you're building like an experiential parlor where there are tattoos and there is permanent jewelry, and people can come and have like a good cup of coffee while they're at it, while they take a decision. They can look at other people getting it. So, it's about, can you monetize both experience and community together in any business? So even if you're like a hair care brand, can you partner up with a cafe to say, we're going to give you free hair spa or hair massages or something of that sort? So I think of experience community in any category, and that can be a good go-to-market.
Our head of marketing, when he joined me, gave me a book called For the Culture. And if anyone, it's really one of those seminal books that I've read as an entrepreneur on marketing. And basically it was about how do you tap into the cultural zeitgeist of what's happening, especially in today's day and age when there's so much noise out there, right? I mean, there's so much social media, so much noise. How do you create differentiation? And it's got these great examples of De Beers diamonds, for example. In no culture did you buy a diamond ring for an engagement. But I think they created this story and tapped into the cultural zeitgeist. And I think you're right. So community culture, how do you create differentiators today? And I think I'd love to get your thoughts on that, because you're in a world where you've got 3 million followers and you've got this big distribution for a new brand. Like, how would you recommend they tap in? Like, what are some of the hacks to tap into either cultural zeitgeist or something that allows you to kind of blow up and get the distribution?
Okay, so what I'm understanding of the question is, how can someone create digital distribution and kind of find a wedge?
In today's day and age where it seems to be quite crowded, is it cultural referenceability?
I think it's, firstly, of course, certain very fundamentals of branding, knowing exactly who you're speaking with, what is the ideal customer persona, and all of that. But I think if I were to speak math and numbers, I would say whenever we put out any piece of content, before it's even shot, when I'm writing it down for, say, a LinkedIn or something, I always ask myself, who is going to share it with whom and why? If I can't answer that question, it's just not going to work as a piece of content. So to give you some context, give you an example. A few months ago, Jane Street is a trading company which was banned in India. Yeah, it was banned for a period by SEBI, saying that your trading styles are not in the best interest of the masses, and it's just a piece of news. But when I spoke about it, I said, which is why even if you have a friend who's into stock trading, he could be sitting with 100 crores of capital, a team of 20 people, and a terminal which has 6 screens. Even then, intraday trading is literally disguised unemployment, because there are funds sitting with billions of dollars which can move the market and wipe them out of the market any single day. The reason I added that little bit of opinion is because every circle, every person knows a friend who's into stock trading, who's saying you can make so much money. So the incentive there was to share it with that person and say, you're disguised unemployed and you should probably do something better with your life. So I know when you do this, you also tend to antagonize a certain sect or a certain segment of society, but people like to be followers. The right answer for most questions in life is it depends. But when you go to your doctor for an ailment and they say, oh, you can choose, you want to get stents, you want to get a bypass surgery, you want to take statins, pick your option, and you'll just say, can you just decide for me? And I think that's what people want. People want strong opinions, so you have to deliver a strong opinion, make it shareable, and it just works.
That's interesting. That's an interesting insight. Change tracks a bit, Sarthak. Tell us a little bit about, from your lens, you've obviously been doing this for a long time. What's the funding ecosystem looking like in India today? Where are the pools of capital? And how have you seen this evolve? What's your lens on the funding environment in India?
Yeah, I'll first give you a very cultural macro view, and I think that should probably answer where India could be in the next 10 or 20 years. If you look at what businesses in Japan kind of optimize for, possibly the eldest economy in the world at the moment. And the reason the economy hasn't grown, among several reasons, is the fact that people continue to run their business, not because they want to make a profit, but because they don't want to let go of any customer that they already have. Because when you speak with people who are elderly, what do they say? They'll say, "Maine zindagi mein kya kamaya hai, izzat hi to kamai hai." So, people in Japan, they cannot afford to let any customer leave them, and they will continue to do business at a loss just to keep that relationship. So they optimize for relationships. In Germany, again an elderly economy, but because they were so much into R&D and innovation, for so many years, they optimize for keeping their employees and their staff above profits and customers. And they go above and beyond that because they know it's their employees who hold the intel and who hold confidential information about what the company is building. So those economies optimize for employee satisfaction and retention. When you look at the US, they had so much capital that beyond a point, they weren't building businesses to make more profits. They were saying whatever you build, you should be the monopoly and the number one in the world, which is why burn all the money that you want into becoming and having the largest market share. But when you bring that lens to India, and I think that's what India is really trying to understand, despite the startup ecosystem being 15, 20 years ago. I mean, the fact that when startups get listed, and even if they have 1 or 2 quarters of profitability, people love to shit at them saying, you know, you're a loss-making company, how do you deserve this much in terms of valuation? What they're not realizing is that they are playing a game which the US was playing, you know, 30, 40 years ago, which is aiming for market share. And if you have to burn money, maybe it makes sense to a certain kind of investor, and maybe they're hoping that in the next 20 years, the Indian entrepreneurial ecosystem and business ecosystem will be very similar to what it is in the US. Because when you go to Africa today, what do people optimize for is just connection with people with power, because everything is about, can you grease palms, you know, get access and sell natural resources and make money, right? So I think when we speak about what's really happening in the startup ecosystem today, I think in the past 20 years, a lot has happened. But I would hope in the next 15, 20 years, a lot more will happen. And the fact that India's growth story is right now on a GDP basis, no matter you believe it or not, if it's closer to 7.5% per annum, I think it continues to be much higher than so many other economies. And I would only want to take a macroeconomic bet. So even if a slowdown does happen in the next 2 years because of the US stock markets at some point, you know, going down 20, 30% if at all, which would have trickle-down effects the world over. But I think over the next 10 years, 20 years, if we can fix the pollution, I don't think I would want to be anywhere in the world but India, because I think a lot of growth, a lot of money is left to be made.
Yeah, you know, we'll double our GDP per capita, and when we double that, the consumption sort of theme will, people will just consume very differently. So I think we're just on a structural, no matter what we do, that's a struggle. And then we'll have a different set of problems, which, you know, we'll address. But I think you're right, for the next 10 years. But if I could just specifically ask again, where are you seeing sort of the funding universe for startups, for entrepreneurs today? Are you seeing different pools of capital than perhaps you saw a couple of years ago? Or is it kind of the same and deeper? And I just like to get a sense of how you're seeing where capital exists.
Sure. I think immediately, as of now, if I were to speak, I mean, we've closed a transaction as latest as last night at 11:30. And what I'm noticing right now is there are so many investors who are just looking for opportunities, and they constantly keep calling us saying, do you have another deal? We've got dry powder and we don't even know where to deploy. So I think money is available really for the taking if your idea is investable, to be honest. That's one. Second, I think people have realized that the entire VC cycle of, you know, having to give your LPs a 4x exit in 8 years, 10 years is something which people may not see a lot of happening in India, because the tech innovation is not as much as the consumption-related innovation, which is why I think family offices with more patient capital are coming in, because they're saying, let's put in money, and if it works out at some day, there is a path to acquisition, there is a path to you know, taking this brand to the whole of India and, you know, opening up other channels for them. So I think patient capital is definitely coming over, and also a lot of people have today realized if their business is not like VC investable, I think they're okay with taking novel modes of debt like revenue-based financing, even if it comes at, say, close to 16, 17% of interest cost, they realize that it's much cheaper than equity.
So the market's getting deeper across
100%.
all categories of capital.
100%. And I think with consumption, you know, D2C brands and all of that, this was bound to happen.
One of our earlier, you know, members was quite well known in the investment world. Rajan Anandan told me a couple of years ago that when he joined Sequoia, which is now Peak 15, he said, I never thought that we'd be investing in consumer businesses, but that's 50% of their thesis. You know, and the reason is that there are just so many brands that have to yet to be created across all categories, and I think that's really where the opportunity is. So you're seeing, I think the consumer side of the business is going to see a lot of capital. I think they said we're a tech investment firm, but 50% of our, at a portfolio level, is on the consumption theme in India. Valuation, it's an interesting subject. It's subjective.
Yeah.
What are some of the things that you want to share or from your experience? But it's, how should an entrepreneur look at valuation? What are some of the things that you want to share on valuation? I mean, I know we're living in a world of crazy AI and madness around the world, so I think there's perhaps some bubble somewhere, but putting that aside, I mean, how would you advise people look at valuation, both from the...
I think valuation is always about who you're really selling to and what is their incentive, which is why the same business, when you go to raise VC capital, you dilute 20% to get 2 years worth of runway. When someone else's, and you might get 5 to 7 times your annual revenue as a multiple, the same business, if it goes to someone for acquisition, would possibly get 1x their annual revenue, because the story of growth is something that you're not selling. You're essentially selling an exit, and the valuation changes. And the same business, when you take to an IPO, the public market's way of looking at things is very PE focused and profit after tax and what is the multiple.
Same business.
Yeah, same business. So I think it's very similar to how, the same coffee with a story could sell at, 1,000 rupees at a fancy new cafe because it's single origin. It comes from this place in Chikmagalur from one farmer who grew it the entire year. And the same coffee in a Nescafe pouch mixed with some chicory could sell for 2 rupees, a sachet. It's all about the story, really. And I think valuation in today is more about, and always has been more about marketing than it is about real numbers, which is why when people were really thrashing the Lenskart valuation online, I think I wanted to take a different view, because I write about valuations and I showed how through comparing it to all other companies across retail and tech, they were fitting right in the middle. So either you could say that Lenskart in isolation is overvalued, or you could look at it to say the entire market is overvalued at the moment that Lenskart fits in. So don't pick on Lenskart. In fact, maybe think it's not the right time to enter the public markets, and the markets are genuinely, possibly in a bubble territory, right? So I think but again, because valuation is always forward-looking, finance is always forward-looking, we're all trying to predict, and no one is right. So whoever ends up being right just feels like they have a thesis and they have a vision, but I mean, we're all winging it at the end of the day.
No, I get it. So listen, I think the articulation of a vision from a founder and the sales pitch, for lack of a better word, is an important part. But are you, as an investor now, if you put an investor hat, are you looking at the conviction of that founder and his vision, and do you put any sort of weight on that, on the valuation as well, or?
I think the first thing I would look at is the market size and the growth rate of the industry where they operate. Because
the brass tack fundamentals of the...
I think that is most important even before I pick the founder. And once you've identified exactly what industry you need to get into, then I think that's where you really take a bet on the founder, because the best of founder could be building in an industry which is not growing as much. Would I want to take that bet? Maybe not, because I believe in macroeconomic forces a lot more than I can bet on in individuals. So maybe if I could bet on individuals, I could be Masayoshi Son in some way. But
I asked this question because you made a comment in your book about Kunal Shah and Cred, and how he convinced a set of investors on his valuation. But I mean, if you were to add up the numbers, different people would have a very different view on that. I'd love for you to share sort of...
Yeah, I think there could be very different narratives. One, you could say that the valuation doesn't make sense. It's a unicorn, but it's barely making any revenue to justify those maybe 1000x, if at all. Like, I'm just taking a guess in terms of revenue multiple, not even profit multiple. But on the other hand, you could also say that if one platform can practically get the top 0.1% of India, which has the potential to pay, willingness to pay and buy everything that's luxury. If you get them on one platform and to love that platform, tomorrow, no matter what comes your way, you'll be able to sell it to them. And if that's the vision that someone is building a product or a community with, and that's the story that investors are willing to buy, looking at other metrics of stickiness on the app and engagement on the app and how much of customer love that they get. I see no reason why someone would not be able to, you know, accept any such valuation for the valuation to keep rising. As long as there is a buyer for something, for a story, I think the valuation is fair. But if you were to ask me personally, as an investor, I'm possibly one of the safest guys. I think having worked with startups, I've seen a little too much where they say ignorance is bliss. The more you know, the more it scares you. So I personally, I think I'm a very index fund kind of investor. I find it very difficult to take bets with my own money in these risky assets, but that doesn't mean the market is same as me. It's very different.
All right, listen, this is probably a good time to open it up to some questions. We have a mic. Do we have a mic somewhere? Anyone? Anyone with questions for Sarthak? It's the first time I've seen no hands go up. Oh, there we are.
Hello. I didn't want to be the first one, but then, yeah, beautiful conversation. Thank you for it. My question is around storytelling. So I've realized that a lot of times the product seems to be pretty average, and the storytelling is such that it compels you to buy it for the first time. And the whole idea around the product is bigger than the product itself. So how do you think we can balance, or what is going to work eventually, the product itself, or it's very important to have that kind of hype or storytelling to get the initial consumer and then to like it eventually?
I think because India's all startups, so many of them are consumer centric. Like I said, experience and community, they become all the more important as you know, we consume so much digitally, we crave for, you know, personal connection, being around people, and even if we're introverted, we possibly need to be around people to enjoy life. And I think, which is why storytelling helps, because I think everyone today is lost. Everyone's trying to find themselves, and every startup building in consumer should think, what kind of identity do I stand for? That if my customer uses this product, this is the identity that they're buying rather than the functional benefit. Of course, the product has to perform on parameters that it's promising. So that's kind of like a hygiene thing that has to happen. But I think that identity is where the entire creativity really lies. The fact that a lot of us are members of the Quorum is because we possibly belong to their idea of, it's not just a club for business owners, it's a place where we have conversations on art, we develop culturally, we get exposed to ideas. And I think that's an identity we're craving to be a part of, and, you know, to satiate as part of ourselves. And I think, which is why if you're also building in consumer, I think it's really important for the entrepreneur to be part of the ideal customer persona, because it's easier for you to kind of put yourself in the shoes of the consumer and think in that direction.
You know, just to add to that, I mean, so you're right, product's key. At the end of the day, you got to deliver the product. You can only sell bullshit for so much time, you know. But on that point on founder and being a little bit of the persona, you are at some level to your business, not some level, you are very much to your brand. I'm generally quite a shy person, but I've realized that I need to put myself a little out there as a persona for the brand as well. So I think that's an important part of getting the story out there authentically, I think. Absolutely. The most authentically. And I think authenticity is a gap as well that people are looking for, which shouldn't be as contrived as, or staged.
Yeah, I'll tell you something. I think if I were to, you know, I can be honest. I think when I was like, okay, we need to fill up this room, who should I really invite among my friends? And, you know, if I were to make a list for my wedding, it would be so much easier, because you could literally, your family could sit down and think of 500 names to invite. But when it's an event like this, you're thinking, would they enjoy the vibe? Would they want a familiar face there? Would they enjoy these kind of conversations? And, you know, this is not just a problem with me. Most people today, most of my friends that I speak with, I think they only have a couple of friends from school or college, but if they really think of having really deep friendships today, very few people can really count on people outside of their immediate circle of family to say, I've made friends at this age, which is why community identity experience is such a big gap. And I think all the trends towards loneliness and all, and what has happened with digitization and consumer content and whatnot is just all leading to that. So I mean,
it's like a counter reaction.
It is a counter reaction. So I think a club where people could practically just curate 20 people who are highly driven towards learning and are willing to come and meet in a room once every week and just listen to someone who's teaching them for 2 hours about something. It could be finance, it could be dance, it could be wine, it could be cheese, it could be anything. Just getting that strong community is so important because everyone's looking for people who they can relate to. And I think it's so difficult today, which is why people are relating to content creators on a screen that they've never met than people around them. That is both an opportunity and something
reflection
it's a reflection of our current society.
Hi, Sarthak. Really good conversation and some great insights, especially the childhood ones. But my question is a little offbeat than, what about chasing returns and risk and ROI? And I asked that question because you're referencing community a lot in your conversation and, how important the role the community plays. But very often, at least what I have seen, that entrepreneurs really shy away from giving back to the community. So you must have had an experience of your own on that. What do you think stops entrepreneurs of thinking about the community or giving back to the community? Because there is so much that community brings, not just from capital perspective, but like I'm part of a very small minority community in Delhi, the Parsi community. And I think it's shaped me in so many different ways. But the conversations that I hear are all about risk return. Definitely, they are the top of the mind. But what do you think how's it going to go from here? Because India, being India, and Bharat you mentioned, I think there's a lot to give back to as well.
Yeah, I think it's a very loaded question. What I can think of is, to be honest, that I think to be able to give and have a feeling of wanting to give also comes from a sense of privilege. And privilege is not just measured in the form of wealth. I think privilege is also measured in the form of being self-assured and happy with where you are in life. Because again, quite like Maslow's need hierarchy, right? Like your need to wanting to give comes from first you being satisfied on all other fronts. And I think for a lot of entrepreneurs, even if you build a great product and you want to get it into the hands of say 5 people and change their life and solve a problem, that in itself is a good way to give to communities. So it shouldn't be measured by if you're impacting 1 million people or you're just impacting 2 or 3 people. But yeah, I think I would hope everyone would get to a point where they start looking at their life like it's more half full than half empty. And the moment you get to that little bit of a mindset, it's easier to give is what I would say.
No, I think you're right. It's at a certain stage, people do start thinking a little bit more about it. But Hurfish, I think maybe to your point on entrepreneurs, I think a lot of people are just hustling and, I think it's the time and they're just trying to figure out and just get the basics done. So you're right. I think it's my hierarchy of time and intent and the ability to give back. But yeah, we encourage everyone to do whatever little bit. God knows we need everyone to contribute and give back a little bit, given some of the certain states of where we are. All right, next question, anyone?
Me.
Sarthak.
Yeah.
Sorry, we come back to you next.
Sarthak, I've been seeing your content for a while. Raising money, say 5, 7, 8 years back, raising money has always been very thematic. So everybody now wants to put money into AI. And there are businesses over the last 10, 12 years which haven't raised money. They are strong businesses, not IPOable for various reasons, but they've lost the glamour for the investor because those themes are not what they want to invest in. So though there is a lot of dry powder out there, some of the traditional businesses, which are money-making, strong businesses, are not being able to raise capital. What do you think businesses like those should do? Strong profit-making businesses, but unfortunately they've lost the glamour for the investor. And there are lots of businesses like that. I'm part of one of those businesses. So what should those businesses really do now to raise money?
Yeah, I think I would firstly say just absolutely those businesses should disassociate from wanting to be glamorous and wanting equity investors for some kind of validation. Because I personally am in a business where, I mean, maybe because I've raised capital for so many people, at times people have offered saying, for your media vertical or for your education vertical, why don't you take capital? And I feel like it's also really constraining, right? Like I think every entrepreneur should think of there are three factors that are really important. One is speed of building, the other is scale of building, and the third is independence. And when you think you can only have two of these, you know, if you want speed and scale, you give up on your independence by getting investors who sit on top of your head, and from a distance it seems really glamorous, but it's painful and it's really tough to really optimize for other people's financial gains, because then you have a responsibility of giving someone a financial return even though it doesn't really align with what your business started off building. And I've seen so many of those cases that I feel those founders now feel, what if we had not raised, our life would have been better. And if you want independence and scale, you will have to give up on speed because it'll come really slowly. And are you okay with it? If you want speed and independence, you will have to give up on scale. So I think it's eventually about what you want in life. But I think for a lot of the non-glamorous traditional businesses who've been possibly going on for 10 years, if I can imagine, as long as they're profitable, I'm sure banks are willing to back them with the right collateral. So finance is not always equity finance. I would think debt finance is amazing if your business can support it.
You know, I read somewhere, just to your point, in the US, there's a lot of, you know, businesses that are now, so the entrepreneurs become older and can't sort of run the business anymore, but could be something as unglamorous or unsexy as, you know, a laundromat, for lack of a better. I think there's a lot of opportunities for other people to pick up on it as a career choice, to buy a business, you know, with strong cash flows and become entrepreneurs.
Absolutely.
So I think there's that wave as well, that is a potential opportunity.
Yeah, and I think if a financial investor is looking for financial return, I think in the market today there are enough investors who are just looking for a sense of identity, because money is enough and is invested in enough places. And I think there are equity investors in the market who are ready to say, I'm willing to invest in this business because I attach a sense of identity to it. You know, for example, a lot of investors in restaurant businesses do it because they love to be in F&B and they enjoy serving and they enjoy being a part of it. It may not necessarily give you the best financial returns.
No equity value there.
Yeah,
very little, in very
correct.
few instances, of equity value there.
So I'm a little new to this space of entrepreneurship, and my question is going to be very basic, but I need it like as an advice. Do you think it's better to have a co-founder or do it all alone? And especially when it comes to funding as well, do you think having a co-founder helps, or even if you're a solo founder, that's all right?
Yeah, very interesting question. I'll tell you how my answer today is slightly different from what it was till about a year and a half, 2 years ago, on two fronts. So if you want like data-backed answer on this, the best resource to look at is Carta. So Carta is a US website which essentially analyzes a lot of startups' information. Until about 2 years ago, they would see that companies with 2 founders, 3 founders, 4 founders had a higher chance of success compared to solo founders, because of course there are complementary skills. You know, one person could be a product person or the industry person, the other could be a marketer or focused on distribution. So you have among co-founders, you can really build and scale. Right now, when as recently as 2 months ago, I was looking at Carta data, and it's rapidly changing where a lot of successful startups are solo founders. Reason for that is because a lot of their gaps in skills are now being solved by a number of AI tools, and there is a lot of technology available to solve for that. So that's a difference. But then it also becomes a question about what kind of person are you? Like for me, I think it'll be very difficult for me to be a solo founder, because I need someone to jam with, to kind of lift me up when I'm feeling down. And I know my co-founder is also such who needs a bit of pushing, and sometimes she does the bit of pushing, and it just works better that way. Because if it were just by myself, I think it would be a little too lonely for me to build all by myself.
But no one size fits all. You also, can you share the table with someone as well? In the
Yeah.
sense like, the decision-making table that is. So I think it really depends on who you are, what kind of person you are as well,
Yeah.
and it's interesting that this data now is suggesting that the trend is perhaps reversing.
Yeah, I would urge everyone to look it up. Just look at that Carta data. It's quite eye-opening.
Can I go ahead? Yeah. Hi, I'm really loving the conversation so far, and I'm an entrepreneur myself. I had a question around money as a currency. I wanted to kind of ask a slightly different question, that if we were to imagine that in this world today, if money didn't exist in 2025, what would be the next form of incentive that we would use? Because I was seeing a lot of words around community and connection. So if you were to think of any other form of currency being used today, what would that be?
Wow, that's such a tough question. I wish I had an answer for it. I'd probably be the IMF chief and a lot more if I had the answer for it. So, I mean, I don't have an answer for this, to be honest, but I think it just reminded me of this movie called In Time, where time is currency, and the rich can live thousands of years, and the poor are living day to day and earning time. So I think if I had to pick, I mean, I would think about it differently. I would say look at it in the form of wealth, and wealth is not just money, it's time, it's health, it's relationships and knowledge. And if you have any lacking in any of those 5, which is lacking, maybe work towards it. And yeah.
All of them compound.
All of them compound.
So I have 2 questions. One is, you're talking about India and its growth story. Where do you think the fundraising environment should be? You kind of said that, funds are about 20 years behind what the Indian entrepreneur is doing, what America did 20 years ago. Where, according to you, what should they be thinking like? What should a funds mentality be? And number 2 is, when you're looking at India's socio-political economic environment, and India's hot, right? It's hot globally. We are really, really rising in all the respective levels that a country should be. But are we kind of getting to the GDP that we want to? My question over here would be, do you think India's growth story is macro or micro?
Okay, so yeah, I'll take the first one first, which is where is the gap in funds, right? So, I mean, if in traditional finance, you look at how funds operate, VC fund essentially comes in early and wants to exit sometime before the IPO or ideally at IPO. And they have an 8-year fund cycle. So there is a 8 to 10 years. So you have a timeline on when you need to collect your returns and give it to your investors. A private equity would think, okay, we need to come in a couple of years before IPO, take it to a successful IPO, wait another year or so, and then take an exit. An angel investor would think, I'll take an early bet and maybe at Series B, can I double my money in 2 years or 3 years? So, all of these investor personas have different incentives and different timelines. What I think India should definitely need a lot more is a more longer term fund, because I think most growth, as they say, we underestimate what can happen in the, we overestimate what can happen in the short term and underestimate what will happen in the long term. And purely from that perspective, I think if there are funds which put no pressure of an exit and say, this is our money, as long as you're building something which is creating impact for the long term, we're willing to back you and be with you for the next 15 years. And the reason I think 15 years is a very important benchmark is because if you were to look at the growth story of every consumer brand that has been built in the world right now, quite like in compounding, a difference in simple interest and compound interest, it's after the year 12 that really the difference begins to show. And I think even in building consumer brand, real brand recall, loyalty, identity, repeats can only be measured, and a brand can be built thoughtfully, standing for what it stands for, over a 15-year period and no sooner. But the problem India has is it's a consumer brand looking for financing from people who have 8-10-year exit cycles and putting a 5-year exit clause on a startup. So I think that is where we really have a gap, which I see currently a few investors coming in. And on the second aspect where you talk about whether India is macro or micro, I mean, I would today, if I had to bet, I would not bet on the Bharat story as much. I would want to bet on, because India is a consumption-driven economy, I would think where is the consumption happening? It is K-shaped. I would want to bet on 5% of the population, which is about 7.5 crore people. The reason I say that is because though till last year, those were the number of people who took international trips from India, and that number had doubled over a 2-year period. So I think anywhere between 5 to 10 crore Indians who travel internationally, I would bet from a macro perspective and then sell identity, community, experience to them. Absolutely. Does that answer? Yeah. Over a 15-year period. Thank you.
Yeah, thanks Vivek and Sarthak for the insights. When we talk about scale, it's mostly products that people talk about, but I'm building in the service business. So do you think a service business is scalable, and what could be the ingredients to reach a scale, a repeatable service, which is not very individual led as a founder, but can be, the consistency of experience can be delivered across irrespective of who's serving it?
Yeah, I think the best example for that is McKinsey. I can't even imagine because the numbers are not public, but I'm assuming they do upwards of $15 billion of revenue annually, which is a service. But it has scaled on the back of 2 or 3 key things. The first is a network of smart people who keep pooling in their knowledge. So it's scaled on the back of a knowledge pool, which is a product in itself, that a lot more offices can keep coming back to extract value out of, sell to their clients in their markets. So it's on the back of a network that adds to a knowledge. And I think a great deal of McKinsey's revenue, right? I don't work at McKinsey, but whatever I've understood is of course, after they deliver a service, they also sell data, they sell software, they sell a lot more products, which almost work as subscription and add to the revenue. So I would think productize your knowledge. There is a wonderful book which is called Building a Second Brain that I ask any person who's a knowledge professional to read. It essentially tells you that how we forget 95% of the things that we read or learn. And can you build a second brain, which is a book or a resource where you store everything that you learn that you can pull out of? And anyone as a knowledge professional who can build that has essentially productized their knowledge and they can scale. So that's how I look at it.
I think, Sarthak, you're at the top end. I mean, we run a service business, so it is tough. It's about the people and just building consistency of an experience when it's very people dependent is very difficult. And counterintuitive in a country, there's so many people, there's a shortage of people, quality people. But I think you're absolutely right. What we've been looking at as well, how do we use technology to, create some of that learning that then doesn't make an individual person dependent, but it becomes like a learning engine. But it's possible, but it's more painful. And I think investors, and I've seen it, in the F&B business, I'll take the name since, but there's Bombay Canteen and Bombay Sweet Shop. It's probably one of the best sort of F&B operators. They just raised some capital. And when I spoke to the founder, he said, listen, I'm not building another restaurant outside of Bombay. I'm going deep in Bombay because the further I go wider, it's going to get tougher. But they just raised money because they built the product business in that. So just generally, product businesses are more attractive to capital as well because it's easier to scale that. Absolutely. Service businesses are, by definition, tougher to scale, I think 60% of my time is on people. And I never thought, I didn't know I was signing up for that. When I became an entrepreneur, I did not know I was signing up for that.
And, to that point, this also reminds me of the time when Vivek and I had a conversation. It's actually recorded and hosted on my YouTube channel where I want to understand the business of clubs from him, and I'm interviewing him. And I remember during that conversation, it's probably not part of the final cut, but we asked Vivek, what is it like every day as an entrepreneur? He's like, every day I wake up and I feel like I'll get a heart attack. And that's what my wife and I kind of related to the most, because that's about a service business. And I think for a lot of people, people tend to obsess a lot about finance or getting funding being the toughest vertical. I think what is tougher than that is HR. I mean, just managing people is possibly the toughest vertical of any business, to take care of their incentives, alignment, vision. It's so much harder than raising money today.
Down. So I started entrepreneurship maybe 18, 20 years back by default, because I didn't get any job. And then it went wildly, like I got lucky, it went very good. Now I'm at a time where I think my time is more important than the effort it takes on the business, and I want to walk away, but then there's all this value loss. So any advice on that winding
Yeah, I
down?
think when you can't take a decision, they say the decision is no. So if you still can't decide, you probably still can't give up on it. But there comes a time in life where you realize, do I still care about holding, say, 40% of this value, or do I care about my time and my health and and God, I would wish the best of health and time and everything for you, of course. But what I'm saying is, I mean, maybe you'll reach a time in life where the decision will be very easy. And yeah, I think it's everyone's journey and it's everyone's figuring out. But yeah, I mean, you'll find it.
Yeah, I think there's also a little ironic sort of, it's counterintuitive, but in the early stages of entrepreneurship, you're like, okay, if someone buys my business, I'm out of here, right? And that's when you don't get buyers. Yeah. But then when you start saying, hey, this is kind of making sense, I'm enjoying it, you're starting to see some operating leverage kick in, that's when you'll actually attract the capital. So I think from your perspective, I think investors also look at the longevity of the business as well. I don't know if you've sort of experienced that, but
100%.
as an entrepreneur, I'm kind of experiencing that.
100%.
Yeah, 10 years down the journey, I think and it's not about the business, it's just about, I think, the entrepreneur's mindset is actually a vibe that gets picked up from, from the capital side as well.
Correct. 100%.
Last, any questions? I'm going to have one last question on just the type, it was the last thing that I was going to ask, and I think it's an interesting, when you raise capital, Sarthak, because I think your book is quite wholesome about, the whole entrepreneurial journey, how important is it in terms of choosing the color of money? It's not about the stage of investor, but for an entrepreneur, how important is it to make sure that, that right fit between the capital and product and the founder for the success of the business? So you think I'd love to get your thoughts. I have my view on this, but I'd love to get your thoughts.
No, I think it's so essential, because it is, I mean, for the lack of a better example, it is like a marriage, right? And your investor has such draconian rights that you kind of sign off to them the moment you raise capital. And I think most founders don't even understand it.
They don't understand it.
They don't understand it. So, I mean, which is why at times when I would fight for certain rights on, say, a shareholders agreement, and the founders just get done with it because I need money. I think what they don't realize is what they're really signing off. And I think through this book and through my first book and through a lot of my content and stuff, the idea is just to educate them so that they're better informed to be able to choose the right color of money.
No, I think it's probably something that is not given enough attention, because it does come back to bite you down the road if you don't give it the right attention up front. So, Sarthak, thank you very much for doing this.
Thank you.
Thank you, everyone. Please give her a nice round of applause.
Thank you, all of you.